Hey everyone, what is going on? It's Wilson. Welcome back to my channel and another video. First of all, happy Lunar New Year's. Whenever you guys see this video, it's Lunar New Year's today, and shout out to all the Asians out there that's celebrating this New Year event. Anyway, in this video, I want to talk about how to trade when the stock market is down. There's a lot of people, especially full-time traders, that do really well regardless if the market is bullish or bearish. So they're always consistently profiting. And you're like, hey, the market is down today, or this entire week, or this month. What comes up must go down. So how do I trade? How do I profit from a down market? So on Friday, at the end of the trading day, we saw that the market was down. And I think according to like CNBC, they said it was like the lowest ever since October, and the Chinese stocks were the lowest ever since like last year, August, or something like that. Um, I mean, it's how it is, right? The market goes up and it goes down. But from my speculation and from what I've been seeing, is probably due to the China virus. But we're not going to get into what's going on there. We're not going to get into the economy side of things. We're just going to focus for this video on how you can trade when the stock market is down, how to profit from the market, even when it's not in your favor. So let's get started. The first one, short selling. Most of you guys are familiar with what short selling is. If you guys aren't, go take a look at my other videos where I cover short selling and short squeezes. Some of the best traders I know only focus on short selling, right? But this is a technique that you can definitely take advantage of when you're going against a market that's going down, right? Especially at where like the entire market is going down or the entire sector is going down. It's very easy to take advantage of that and do some short selling. Now, what some of the things about short selling is that it is extremely risky because you are not using your own capital, right? You're borrowing money on a margin, and you have to buy back the stock. So if the stock goes up, then it's definitely not in your favor. So what are some of the best short selling techniques? Some of the best short sellers I know, they take advantage of the market every single day with like penny stocks, pump and dumps, these biotech companies that they make some sort of fake news. It pumps the stock up for a day or two. Basically, the patterns we look for when it comes to profiting from short selling are the ones where you see a very big jump, and then the next day we want to get in and short sell because it's going to collapse and go back to like 70 cents or a dollar or something like that. So a lot of pump and dump penny stocks, the OTC markets, those are really good for short selling. But at the same time, this is a really good technique for you to take advantage of if the whole entire sector that you're watching or the whole entire market that you're watching is going downwards. Next thing, when the market is down, you can always buy put options, right? So trading options is a whole different game. It's nothing like just buying a stock or selling a stock. Options can get very complicated, but at the same time, it could be very easy if you're doing like a quick day trade. The ones that get really complicated are the ones where you buy it and you try to hold it for 3 or 4 days. Then you see the price get out of the money, and then it goes back in the money, and then you're like, hey, how come like my profit is so much less than when I bought it on the first day? That's because of the time value. I will be making another video soon, probably sometime this week, where I cover exactly how options work and everything about time value, how to actually determine the price of processing of options, and how things go. But for this video, put options is a great way to kind of benefit your and take profit from the market when it's going downwards, when the trend is going downwards, right? So when the whole entire market is going down, an example would be like if Amazon was trading at 1,800 right now and it dropped by $30, the market is still going downwards or the tech sector is going down. So you buy a put option for like 17.50. And basically what happens is that you're predicting that the stock will continue to go lower than that. And the closer it gets to 17.50 or even lower, then you're in the jackpot zone. That's why I like to call it jackpot. So put options is the second way that you can benefit from a downtrend market. Third way is leverage ETF, right? So there are a ton of leverage ETFs. There are 1x, there's 2x, 2 to 1 ratio, 3 to 1 ratio. The ones I like to trade are 3 to 1s because they go so quick and they reset every single day. If you're not familiar with how leverage ETFs work, again, check out one of my previous videos that I posted about how I trade leverage ETFs. It's something that I personally love trading. I trade it all the time. Some of my favorites are definitely UGAS, DGAS, JNUG. Those are great examples of ETFs. One usually they're one will follow a certain sector or a certain market, a certain trend, and if that one goes up, then the other will always go down. So, but the good thing is that they reset every single day and they trade at a 3 to 1 ratio. So they trade 3x the speed of a normal ETF market, which is very powerful and it works really well for swing trading as well as day trading. But if the market is going down, you can always buy one of those bear ETFs that follows the market and pretty much trade that to follow the downtrend rhythm. But do check out my other video on leverage ETFs. The next way is take this time to buy dips. I know you guys are probably thinking, hey, I should be buying dips all the time regardless. When like this is considered cheap for a stock. Well, what I'm talking about is when the whole market is down, and like that there's a company that normally does very well, right? So for example, let's say Apple. This is a solid company, and there's no reason for it to drop like $50 on no news just because the market is doing bad. What you do is that you buy into this because you know it will eventually recover. So when the market is down, personally, I like to take advantage of all these high value stocks that normally perform really well, but took the dip because of the market going down and not because of a bad catalyst or a bad company news. So I only do this for those companies that perform really well, stable companies, well known like maybe blue chip stocks, Microsoft, something like those that tend to do really well and that is very cheap to buy into because the market is down. I would never do this with pump and dumps or penny stocks. I'm not a fan of buying dips for any of those, but I know a lot of people that do. But that's just my take on it. The last one, don't trade. You don't have to trade every single day. You can be very disciplined and make sure you have good risk management. Be disciplined, and that's how you will profit. Find a strategy that works for you, stay disciplined to it, and you don't have to make a trade every single day. I know it might be tempting or your hands might get itchy, but hey, there are days where the market's not in your favor. Even on a bull market, there are days where the stock market just doesn't go up by a lot, right? Maybe it's only up by like 1%. And it's not worth trading. And take this time off, turn off the computer, go watch a movie, go Netflix and chill, go out, go for a hike, whatever you do. Don't trade that day. Anyways, I hope these tips helped you. If it did, give this video a like, a thumbs up, subscribe. Again, I'll be coming out with that option course. A lot of people have been requesting it. And again, I don't charge for any of this. So it will be all on YouTube. Just subscribe and you'll be able to see it. All right. Thanks again. Talk to you guys soon.